Hey guys, welcome to my channel where I believe that better finance equals a better life. My goal is to give you the straight info on personal finance, real estate, and wealth where you guys can achieve that life full of options. Today's video is something that affects us all, and that is housing. Many of you out there might be wondering why house prices are so expensive these days. House prices in many cities across America feel like they're being strapped to a rocket ship, with prices going vertical to the frustration of many buyers. Right now, it seems all across the country, houses are in such huge demand from buyers looking for a place to call home. You might be beginning your housing journey, or you've been in the battlefield for quite some time where you've experienced getting beat out with buyers with bigger pockets. It makes me wonder if we're in a big bubble like before, or is this just some surreal supply-demand issue we're having? I'm going to drill down on the most important factors driving housing prices today, so you guys can better understand the environment that you're operating in. I'll be discussing a major demographic shift that's happening in America today that's really not talked about in the news that much, and it's a major contributor of what's driving these housing prices. But in the meantime, please like and subscribe to my channel so you guys can help me out with the YouTube algorithm. So the better you can understand the housing market, the better decisions you can make for you and your family. So stay tuned if you're interested. Right now, there's a huge demographic shift taking place in America that I want you to be aware of. Per the book Big Shifts Ahead, which I've mentioned a few times before in my other videos, there's a great migration of people moving right now to new growing cities in America. The author, John Burns, calls this the Great American Move, and it's definitely affecting you if you're trying to buy a house in these new growing areas and cities. People from the expensive coastal areas, such as California and the Northeast, are moving away from these high costs of living in highly taxed areas. They are picking up and moving to cheaper areas in the United States that are more tax and business friendly with a lower cost of living. You can see here in this map the coastal areas signified by the red dots where people are leaving, and the areas in green where they are moving to. This is why you see places like Phoenix, Austin, Raleigh, and Nashville, and the whole state of Florida blowing up these days. This move has been a few years in the making, but given how expensive these coastal areas are, the move of people are accelerating. This huge influx of people causes a drastic supply and demand issue to these new growing cities not being able to keep up with their housing inventory. You don't have to look further than Phoenix, Arizona, where 200 people are moving there every day for the last decade. Or Nashville, a little while back, where they have 100 people moving there every day looking for a better life. When it comes down to it, this great American move is about job opportunities, lower cost of living, and lower taxes. If this piques your interest, check out a few of my other videos up there where I talk about these growing cities like Phoenix, where I discuss the economy and the housing market there. I also have a video on the key secrets to the best real estate markets of the future, which is all related to what we're talking about today. But getting back to the issue of this great American move. A long time ago, California and places in the Northeast like Boston and New York were the places everyone wanted to move to. They were the places with the most job opportunities to get ahead for the hardworking individual. But now the tides have turned, and these expensive coastal cities have become a victim of their own success. They have gotten too crowded, too expensive, and too highly taxed that ordinary hardworking people can't get ahead in life. Imagine if you're running with a 20-mile-per-hour headwind battling you every step of the way. Despite how hard you run, you will have that nasty headwind slowing you down and pushing you back in the opposite direction. This is the financial headwind most people are facing in these coastal cities, and it's the reason why they're leaving. Look no further than California, where they tax their residents 13% state income tax. They also make future business owners jump through so much red tape to start businesses that they're saying it's not worth it to be here. Coupled with the fact that an average nothing special house can cost $750,000 to $1 million, you can understand why they're leaving. House prices through the roof, higher taxation, low quality of life, you can understand why people are bailing left and right from California and these other places in the Northeast. Whether you're a first-time home buyer or a millennial thinking about buying a home, what it really all comes down to is that each of us are trying to get ahead in life in an area that gives us opportunity. Bottom line, I think everybody wants a chance to work hard and be successful and achieve that American dream, however you define it. So this great American move to these new growth cities definitely affects the supply and demand factor in these areas. And that's one reason why you see more competition and higher prices. Any city with abundant jobs, high quality of life, low taxes, and decent housing prices will probably be a very competitive housing market with prices spiraling upwards. So you have this great move affecting house prices, but what also affects house prices is our extremely low interest rates. Don't kid yourself, this is one of the big reasons why you see house prices rocketing up. Our government has lowered, or shall we say manipulated interest rates to a 50-year low, which uplifts housing prices more into the stratosphere. You're asking how that is. My real estate teacher taught me that the most important factor is not necessarily the price of the house, but it is the monthly mortgage payment a home buyer can afford. Let me explain this further by giving you a clear example. Let's just say your budget is $1,340 a month for a mortgage payment. The interest rate you get from a lender dramatically affects the price of the house that you can afford. A few years ago, we had interest rates around 5%, which was incredibly cheap at the time. But now we have interest rates hovering just above 3%. And let's take these two interest rates as examples and see what a home buyer can afford. Now remember, a $1,340 mortgage payment is what you can afford. Can you buy a $300,000 house with a 5% rate? I use $300,000 because that's the average price of a house in the US these days, and it's also a nice round number. With a 20% down payment, your loan would be $240,000. 5% with a $240,000 loan, your principal and interest would be exactly $1,342 per month. You're only $2 over, so it is well within your budget to pull this off. But now let's switch out the interest rate to 3%, but still have the $1,340 mortgage payment that you can afford per month. With a lower interest rate, you can afford a more expensive house, and I'll show you why. With a lower interest rate, can you now afford a $400,000 house? Let's run the numbers. With the typical 20% down payment, now your loan is $320,000. 3% at $320K, your monthly mortgage payment is $1,349 a month. It's $9 over your preferred payment of $1,340, but really, it's well within your budget. Because of the reduction from 5% to 3%, you can literally buy $100K more house with the same budget of around $1,340 a month. And because of the government lowering interest rates over these last few years, you guys can clearly see why house prices keep going higher and higher. In effect, house prices are being pushed up further and further, but the monthly mortgage payment still remains the same. But getting back out of number crunching mode, another reason why you see higher house prices is due to the massive printing of money we've had recently in the last 2 years. This is an aspect not emphasized enough out there. In a previous video on inflation, I explained how we printed $2.2 trillion in 2020 and $1.9 trillion in 2021. The massive debasement of our money supply has a direct correlation on why housing has gone through the roof recently. Currently, housing prices are rising in price at the fastest rate since 2005. Simply stated, we have more money in the system now chasing a set amount of goods, services, and scarce assets. Another huge factor of why we see house price increases is due to the low supply of homes on the market. Our American builders have simply not kept up with demand over the years. You can see in this chart that new construction for starter homes has been in the decline for many years. Reduced housing supply and increasing demand makes those houses go up higher and higher. We see in this Wall Street Journal report that we have a shortage of 5.5 million houses. All of this contributes to why people are having an extremely frustrating time trying to buy a house these days. Another point to recognize is that the biggest generation in the US are now entering the housing market. The millennials, whose age ranges from 25 to 40 years old, comprising of 72 million people, are now one of the biggest drivers of the housing market. This new generation of buyers jumping into the market greatly increases the demand side of the equation. So in all, I hope you guys now have a better understanding of what's going on in the housing market and why homes are so expensive these days. I wish everyone out there the best of luck in buying a place to call your own. If you do buy a place in one of these growing areas, know that the house that you buy will probably be a good investment in the future. If you like this video, please check out my other videos on personal finance where I talk about real estate, wealth, and other investments. I wish you all out there a life full of options, and I always say better finance, better life, and I'll see you guys on the next one.